A New York strategy for Forex. That is what we're going to talk about today. We have already talked about a London strategy for Forex. Now we are going to talk about a New York strategy for Forex. For indices, I will make a separate video. So the upcoming video is about indices. Now, the thing I want you to pay attention to in this video. Again, we have two variables, as I called it in the previous video for the London strategy. There was an Asia expansion and an Asia consolidation variations. Today we are going to touch on a New York retracement and a New York reversal. And the reason I want you to pay attention to it is because the New York retracement is the exact same thing as the Asia expansion, and the New York reversal is the exact same thing as your Asia consolidation. The only thing that changes is the time. A lot of people think it's a whole different strategy. You need to look at way other things. No. You do the exact same thing. The only thing that changes is the time. So in a funny way, you can see that the mechanical steps that we use in this video are quite similar to the one in the London video. All right, so let's get into it. So here on USD JPY, what is the context? If we move on to the monthly time frame, here we have the monthly time frame, and what we can see, we are coming into an order block right there with an overlapping fair value gap. In the weekly forecast, we mentioned this, and the beauty of this monthly context is what? Because now on the weekly, on the daily, on the 4 hour, you already know where it is likely heading. It's heading towards this high. That is your opposing premium array. So all that area on the lower time frame, imagine how much price action that is. Your bias is set for the coming months. Having the monthly in context there is the easiest thing that we can have. So we have that monthly order block on our chart, and we know the monthly target as well. Let's drop down into the daily time frame. All right, so here we are on the daily, and on the daily you can see here we came into that monthly order block right there. And this is our monthly target. So in between that monthly discount array to that monthly premium array, this area right there, that is exactly where you want to get involved. That is the highest probability price action right there. That is the exact same as we mentioned on the previous London video, where we go into the 4 hour, you have your 4 hour context, and you use a 5-minute entry, and that is where you want to get involved from the premium to the discount array. It's as easy as that. That is all the context you need. It's important to understand when to trade. So whenever we take out that high, for example, that is when you want to take a step back again. Again, that can still be high probability, but it's not as high probability as this price action right there. And it's also the reason why a lot of people tend to get tricked when this right there happens, when this huge down move happens. A lot of people tend to get tricked because their daily, their weekly is not in context of their monthly time frame. And on the monthly, it's just a continuation. But on a daily time frame, of course, it might seem like we are very bearish right there, but we're not. And it's actually the opposite. We are very bullish, and there are high probability conditions for bullish prices right there where we can get involved. So the thing I'm trying to tell you here, I hope you can understand, because the way you get to an entry pattern is the exact same way as you get to a bias. Because this exact thing, when you move from monthly discount to monthly premium array, that gives your bias on your weekly, on your daily, on your 4 hour. When you then go into the weekly, into the daily, into the 4 hour discount arrays to premium arrays. For example, we have this right there, this daily discount array to that daily premium array. From that area to that area, that is where you want to get involved. It's all fractal. It's all fractal. You can make it as crazy as you want. If you want to use 1 minute PD arrays with a 1 second entry pattern, then you can do that. But is it optimal? No, I would go up in time frames. Now, if we go into that daily area right there, that daily order block with the overlapping fair value gap, and go into the 4 hour. Here we are on the 4 hour, and you can see the exact same context, the same lines. Here we have the daily order block, that daily fair value gap was right there, the daily premium rate, that is our target. And as well, the monthly target is also still sitting right there. Then on the 4 hour, we can notice, if I zoom in a little, we have this fair value gap being created. Remember the ST model? That fair value gap is already enough to trade off of. Just that singular fair value gap. So even on the 4 hour basis, that could be your entry. But again, that's a whole nother topic. Let's focus on the New York strategy. And then right there, if we zoom in and we go into that 4 hour fair value gap, and we go into the 5-minute time frame. Here we are on the 5-minute time frame, and you can see this line on the left right there. That is your daily order block with that overlapping daily fair value gap that we saw. And this gray area, this gray box, that is your 4-hour fair value gap. Can you notice something? Can you notice how fractal this is? Because the thing we saw on a daily time frame that I mentioned in the monthly context all the way at the beginning, when we had a huge move down on the daily time frame, the exact same thing we are seeing on a 5-minute here. A lot of people tend to get spooked. They tend to get overwhelmed because they don't understand the time frames above it. And what is the context? Again, it all started with the monthly. So the monthly is bullish. We're coming back into a daily order block, into a daily fair value gap. The 4-hour creates an ST model. This fair value gap, if we are going higher, where are we likely going higher from? That 4-hour fair value gap. The only thing we need to do is in that 4-hour fair value gap, we need to look for a 5-minute entry pattern. The exact same things we talked about in a London strategy video. The only thing we need to do there is look for an entry pattern. That's all we need to do. So you can see here that me giving it names. So this would be a New York reversal. Why is it a New York reversal? Because the London low was right there. It's around here. London low was right there. So London didn't make the low of the day. If London makes the low of the day and New York respects that low, then you have a New York retracement. This is a New York reversal. How can we know that? Higher time frame PD raise. Your higher time frame PD raise. And again, that can also be your 15-minute PD raise. If you are taking 1-minute entries, that can also be your 15-minute PD raise. But just make sure that 15-minute PD raise are in context of the 1 hour. If you want to use 1-hour PD raise, perfectly fine. But just make sure that the 1-hour PD raise are in context of the 4-hour PD raise. Because you have a 5-minute fair value gap right there. Why didn't it get respected? Well, there's a 4-hour fair value gap sitting right there just below it. So this is all your liquidity. So we come into a higher time frame PD right here in New York. That is important to understand. And we come into it in New York. Then here we have our ST model right there. This could already be an entry, but let's use the same premise that we used in the London video using overlapping PD raise. Then right here, you might not have gotten involved. Perfectly fine. So what do? We wait. We wait for what? We wait until we do have an opportunity. So either it comes lower, a bit lower until we reach that breaker block with the overlapping fair value gap, or we use this order block right there with that overlapping fair value gap. Now, what is our first target? Well, the first target is the intermediate term high. The intermediate term high, aka the opposing premium array on a 4-hour basis, which was this high right there. Now, is this a very fruitful RR? No, it's not. All right, now can we cover this low right there? Well, is the 5-minute right there in context of the 15-minute? Not just yet, because we haven't taken a look at the 15-minute. So if we take a look at the 15-minute, we can see that the 15-minute came into that fair value gap as well. So the 15-minute also creates this swing low. Now, again, it's important to also look at the 1 hour. So is the 15-minute in context of the 1 hour? The 1 hour didn't have any fair value gaps just yet. So there's no reason for the 1 hour to retrace right there. So what we did right there, that's important to understand. We had a checklist and we went over the checklist. We went over our mechanical steps and we saw there's no reason for price to retrace. So we can place our stop loss at that 5-minute low that we had right there. So that is a perfectly fine stop loss placement. Now you can see the RR without suffocating the stop loss. There's no reason to suffocate. When I say suffocate, you can define suffocating by placing your stop loss at a place where price still has a reason to come back. That is suffocating your stop loss. That is the definition of suffocating your stop loss. Right now, you can notice we already have a 2RR just aiming for that high. On a Monday. On a Monday. And if you're in the mentorship, if you're in the money-making team, you know what I always tell people on a Monday. Mondays are not there for you to aim for the moon. They are there to build up your confidence or destroy your confidence. And the way you destroy your confidence going into the week is by aiming for a shit ton of RR and taking losses and break-evens all the time on a Monday. That is setting yourself up for failure for the rest of the week. Monday, easy targets, easy profit, high probability trades to build up your confidence going into the rest of the week. The Monday either makes you or breaks you. So this is an example of New York reversal. How did we know? By knowing the higher time frame PD raise. And you can see the similarities, because if I didn't mention to you that this was New York, and if I mentioned to you that this was London, then this would have been your Asia consolidation London variation. It would have been the exact same. There's literally no difference. The only difference is that the time changes. You might perceive it different, but it's the same. It's the exact same. Now, let's take a look at New York retracement. And we don't need to go that far, because if we take a look at the same exact price action here on USDJPY on the 4-hour, we still have the exact same context. We have the monthly target right there. This is your daily order block. This is your daily target. This is your 4-hour fair value gap right there. Then what do we notice? Then later on Tuesday, we have this 4-hour fair value gap sitting right there. And now let's go into the 5-minute time frame again. Right here, we notice that London right there is coming into that higher time frame PD ray already. And London already had what? A displacement higher. What is a displacement again? Defined, it's a fair value gap. So the difference between the example we just saw and this example is what? London in the previous example didn't come into a higher time frame PD ray. That was in alignment with our targets, etc. and with our context. Here, it did do that. So what do? Again, can it take out this London low? Yes, it can. Of course it can. Who am I to tell price it can't, right? Of course it can. But what do? What are the steps again? In New York, you now wait for a bullish fair value gap higher. Where is your bullish fair value gap in New York? New York starts right here on that candle. This right there is your first bullish fair value gap. So that right there could already be your entry, or even higher right there. Which low do you cover? You cover this low right there. That is your intermediate term low in New York. And again, what are your targets? Your targets are that high. That is your 4-hour opposing premium array, aka your intermediate term high right there. And of course, you can tell again that the RR is not that great. So what do? On a Tuesday, you can potentially aim for more. But what you can also do is refine your entry, because as you can notice, we are not entering on an overlapping PD ray right there. So either we have to have a little bit more patience and we enter off of that order block where we also have that fair value gap and we cover that low, and that already increases your RR to 2. Just make sure that you have a set entry pattern that you can always rely on and that you repeat day in, day out. You don't change it. If you change it, then there will be confusion, because when you get to that entry pattern and you need to actually enter and you don't have a set entry pattern, you will confuse the absolute living shit out of yourself. And the emotions will start to rise and you will think, oh, do I need to enter on this order block? Do I need to enter on this fair value gap? It's destined to fail. It's inevitable. You're going to mess up. And the beautiful thing that you now might have noticed, what is this? This is the exact same as Asia expansion. We just called New York retracement. Why? Because it's in New York, but nothing changes. The only thing that changes is the time. It's truly a beautiful thing. It's all fractal. And once you notice this, the fractality of everything that we mentioned, it's absolutely beautiful. And I'll mention it again. Your new week opening gap, your Reaper fair value gap, your AMD, your Power 3, even your market maker model, which we'll go over into later as well. Don't worry. Your silver bullet, everything you can think of is already in this trading plan. All right, on that note, I am back from vacation. So thank you all for your patience. We will be having our weekly forecast again this Sunday. I'm very excited to talk with you all. So this Sunday, 8:30 again. Coming weeks as well, 8:30 live stream right here on YouTube. So the time has come. If you haven't watched that London video just yet, please do watch it. And if you have watched it, go watch it again, because now you can see it's basically the exact same thing. The only thing that changed is the time. Right here on your screen, you can tap the video and you can watch it. All right, perfect. Thank you.